Good day, people, and it is a good day, of course. We're seeing Meta currently up 12% on the day. So what exactly has caused this? Well, looking at the chart, we can see that it is actually starting to see a bit of selling pressure at this time in the day. So what can we take away from this? What can we take away from the earnings report? Well, in this video, we're going to be going over Meta financially, intrinsically. We're going to be looking at their earnings report to really understand what exactly we can take away from this, where this company could be heading in the future, and if it is worth your investment today. Now, none of this is financial advice, of course. With that being said, let's get straight into the video. So first things first, Meta has delivered some serious numbers this quarter. They reported a huge $47.52 billion in revenue, which is up 22% year over year. Net income came in at $18.34 billion. That's a 36% jump. And as far as earnings per share goes, that is currently coming in at $7.14, beating expectations by a long shot, which is pretty impressive, right? Now, a big driver of its growth is Meta's advertising business. They made around $46.6 billion from ads, which is a 21% increase from last year. What's really powering this growth is Meta's focus on AI-driven data tools. Like, for example, their Advantage Plus campaigns, which are helping advertisers get more bang for their buck, essentially. And the results of this is a more personalized ad service and a better conversation starter for their users, essentially. On top of that, Meta is seeing strong user engagement. They now have over 3.48 billion daily active users across their platforms, which is up 6% year over year. More users means more opportunities to show adverts, of course, and that's a win for Meta in terms of revenue. However, Meta is not slowing down on their AI investments either. They in fact spent $17 billion on AI in just Q2. They're doubling down on building the future with AI and expect a $64 to $72 billion in CapEx investments this year. So it's clear that they are looking at long-term growth, even if that means heavy short-term spending. Looking forward to Q3, Meta expects revenue growth to continue, but at a slightly slower pace due to tougher year-over-year comparisons. So while things are looking solid, we might see a bit of moderation in the growth rate for Meta next quarter. So what can we really see for capital trades here? What are the Republicans and Democrats really doing? Well, it's a pretty split bag. The most recent file was on the 11th of July, which was traded on the 30th of June, and that was a buy from a Republican. There is a few Republican buys here, and there is, of course, a few Republican sells, but I think in general it's a mixed bag, and there isn't really too much to take away from this. I think there will be a lot of profit taking now. However, Meta is now at an all-time high, and so a consequence of this will be it's most likely going to continue to rally long-term, maybe mid to long-term. Short-term, as we will get onto, I expect this to start to plateau. So what do the analysts price in for Meta currently? Well, they are currently putting Meta at a strong buy, and that is based off of 68 analysts, with the price targets for the next 12 months coming in with a high of $950 and a low of $587. It's fair to say there's quite a diverse split there. However, it does look to be on the side of a strong buy when you actually look at the analysts, giving a result of 49 at a strong buy, 11 at a buy, 7 at a hold, and only 1 at a sell. So what can we realistically see for Meta, especially in this last earnings result? Well, looking here at a retention rate, this essentially shows us how much money is retained within the business. So looking at the revenue, it was $47 billion and the net income was $18 billion. Therefore, you have a retention rate here of 38%. If you compare this with the previous 5 quarters of data, the mean comes in at a result of 38% retention, which is absolutely incredible. For a company to be bringing in a 38% retention, that is incredibly high. However, you do need to understand the business model, and when you do, it does become clear because their primary revenue source is, of course, advertisement, and realistically, what capital do you need to put forward to advertise? You don't. So it makes perfect sense. But of course, they are now developing a lot of AI. And so as a result of that, you are going to see this probably start to drop off slightly. Looking at the liquidity ratio, the mean comes in at here for 1.53, which indicates that for every dollar of debt in which this company owes, they actually have $1.53 of liquid cash to pay this back in. And for this recent quarter, this came in at 1.7. So again, that is incredibly strong. That's what you want to be seeing essentially. Looking at the bell curve or normalized distribution over the last year, we have seen 53% of days come back as a positive over 1% return, with 24 coming in at a negative return for Meta. Going over some of the figures for Meta, the current price to earnings is at 29, with the trailing 12 months earnings per share coming in at 26.15, with a growth rate of only 7%, and that was being relatively generous, and a surprise rate of 19%. We can conduct an intrinsic value for Meta. So looking here, what can we see? Well, on the bullish side here, we have a valuation of $603, which is obviously well below the current price. And if you factor in a margin of safety here of 25%, this gives you an acceptable buy price of $452. And it only gets worse when we go over to the bearish side here. This comes in with an intrinsic value of 367. So it's clear that Graham's formula does not realistically appreciate the growth within this stock. I think it's primarily down to the growth rate being incredibly low. And if you're wondering where I got these growth rates from, it's actually Yahoo Finance. If we go to the analysis tab and scroll right down, we will see, if I zoom in, Yahoo Finance gave them a growth rate over the next year to only be at 5.66%. So if we do actually look at what they grew at year over year, they actually were up 22% on a revenue basis. So I do think that that is very much a conservative way of looking at it. So if we do bump this up to 15, which I think is a bit more realistic, we do suddenly see this become a buy on the high side, but it does remain a sell on the low side. If we now scroll down to Peter Lynch's valuation, this comes in with a fairly valued result. And looking at my formula here, in which I generated myself, if I can get it in the screen properly, we can essentially see here that I yield an intrinsic value of $1,313 with the 15% growth rate. If we do change this back down to the 7% growth rate, it's going to be in the red. It's going to be 684, which isn't massively below where we currently are, but I do think that a 7% growth rate is actually incredibly tight in a sense. So I would like to increase that, but again, this is not financial advice. These are just my own personal opinions on as to what I'm doing, so take with it what you will. Looking on a discounted free cash flow model, this doesn't actually include the previous quarter, this quarter's results, of course, but we can see that this stock is now looking overvalued on this year's growth, a 3 years growth, but it is looking undervalued for a long-term play on a 9-year growth. But it just goes to show that I don't think their free cash flow is massively great, but why would you need it to be so great when you have so much cash on hand? So what can we see looking on a chart analysis for Meta? Is it time to buy this stock at this current price? Well, if you're in it for the long-term game, then probably it is yes. However, if we do actually do a dive into this chart, what can we see? Well, before the earnings, we were seeing some sort of a pinch here. We saw some fair value gaps forming where we retraced into it and started to fall back down. But I think that's a result of earnings actually looming over, and so therefore you're just going to see a lot of people start to sell off. I don't think this pinch actually had any effect as to where the price moved at all. It was just a pure consequence of the results. So looking on the EMAs, we are well into a bull position on all of them. We're closing consistently well above them all. We're in a long position on the 50 and 100, but where I start to get wary of this current price is on the Bollinger Bands, and this is essentially a dynamic RSI. So we like to see a stock bounce between overbought, which is this red line, and fairly bought, which is this 20-day SMA. When it drops below this, it's typically in a bearish price action, but when it's above, it's going in the positive direction, of course. And when we're well above this current red line here, the stock is obviously massively overbought. So typically what you'll see with stocks like this is I will bring up Applied Digital for an example, where you see us jump above it, you try and close towards the 20-day SMA, and then from there whatever happens. And we have seen similar things in Applied, and I have just done a video on Applied around a week ago, and I did draw out this fair value gap. It did fall through it, but earnings came out in favor, and that is what has happened since. And it's pretty much a very similar story to Meta in that sense, but Meta's much more in an earlier kind of sense with it. I mean, today alone, if you look at this candle, I'll zoom in because I'm not sure my recording software properly renders it, but if we look at this candle, it's quite a bearish candle. We've seen it open up here. We've climbed all the way up to here. We've sold down to here, and now we're back to here most likely. So it's looking as if it's not the most bullish candle in the world, but obviously when you open up that high just as a result of pre-market and after hours, then you do expect there to be a lot of selling, a lot of swing traders getting in and out, and a lot of profit taking essentially. But it's not the end of the world, and actually on a 5-minute chart it does actually look quite decent. I think what would be much worse is if we saw what we saw with SoFi, where it essentially opened up and fell straight back down. But again, as of recording this, we are about here within the trading day, so there is still plenty of time for that today. So for me right now, I'm not looking to get into a position into Meta. I do think it's going to start to rally up, but I think right now we are most likely going to see this almost recall back towards at least overbought, if not the 20-day SMA. I really wouldn't expect it to go any further than that, and that could take a day, 2 days, or maybe 2-3 weeks. You really don't know. It depends how stable and how much volume is being traded within the stock, and right now there is a lot of volume traded, so it could definitely start jumping around. Looking on these price targets here, it's a bit of an easier way to understand where this could potentially head. From here, the analysts suggest a 20% high side and a 26% downside, with an average near 3% gain. Realistically, what we might expect to see happen now is analysts will start adjusting their price targets in the favor of Meta, therefore leading to a lot of FOMO within this stock, and therefore, I'm saying therefore a lot here, but you will see a lot of buying pressure, and especially when the stock is at an all-time high, there isn't any level of resistance to slow it down. So that is Meta. I think short term we should expect to see this either trade sideways or drop off within the next couple of days and weeks, but long term, if we stay above this all-time high here, then I expect us to just continue the rally, and we'll see where it goes from there, especially if analysts adjust their price targets. So I hope you have enjoyed this video and found it somewhat useful. Here's the earnings report summarized if you would like to recap on this, but again, none of this has been financial advice. It is just my own personal opinion, and of course everyone's got a bias towards certain things, so you do have to do your own research. With that being said, I hope you have enjoyed the video and consider subscribing. I'll see you for the next one.